Now that you have understood what is meant by time period in accounting, we need to understand the next essential concept, which is accrual versus cash basis accounting. Okay, in accrual basis accounting, transactions are recorded in the periods in which the events occur. Okay, so companies recognize revenues when they perform services rather than when they receive cash. Okay, so the main thing in accrual basis accounting is not that we recognize the transactions based on the cash movements, but it depends on when do we perform our services, or when do we consume services. Okay, when do we get services from our suppliers, or when do we render our services to our clients. Okay, so in terms of expenses, expenses are recognized when incurred. Okay, when we use the expenses. For example, if we use electricity in the month of May, but we pay that electricity bill in June, then we must recognize the expenses in May and not wait until we pay the bill in June. Okay, so in terms of the revenues, we recognize receiving revenue when we have actually rendered the service, or when we have passed down the inventory to our clients. So for example, if we have sent the items ordered by our customers in January, although the customer will pay it in March, but we must recognize the revenue in January and not wait until we receive the money from our customer. That is what accrual basis is, and this is in accordance with generally accepted accounting principles. Okay, but on cash basis accounting, we recognize revenue when the cash is actually received. So in my example just now, if we send the items ordered by our customer in January, but the customer pays for the items in March, then we will only recognize the revenue in March. So similarly, when we incur or we consume electricity in May, but we pay for the electricity in June, then we will recognize the expenses in June at the time when we pay by cash. Okay, so this is called cash basis accounting, and it is not accordance to generally accepted accounting principles. So organizations, businesses, they should follow the accrual basis accounting and not the cash basis accounting. Okay, so so that follows on with the recognition of revenue and expenses. So like we mentioned before, so how do we recognize, or when do we recognize revenue, when do we recognize expenses? Okay, so it says here, we recognize revenue in the accounting period in which the performance obligation is satisfied. Okay, so like we mentioned earlier, that that businesses have time periods. So sometimes the transactions, the revenue or expenses, the difference between cash and the difference between the cash and the events that occur span across multiple accounting periods. So that comes the issue of when should we recognize? Should we recognize in one account the transaction in one accounting period, or we recognize the transaction on the next accounting period? Okay, so from the revenue recognition principle, it says that we need to recognize revenue in the accounting period where the performance obligation is satisfied. Okay, so let's say the customer requests service in January, we satisfy our obligation in February, but the customer pays in March. So when should we recognize the revenue? Okay, so based on the revenue recognition principle, we should recognize the revenue when we have satisfied the performance obligation, when we have rendered the service. So, or when we have sent out the items. Okay, so the customer requests the service in January. We have finished the service in February. So in February is the time that we should recognize the revenue. And whereas we might receive the cash in March, but then the correct time for us to recognize the revenue is in March. So that will lead to the need to do adjustment, which we will show in future videos. Okay. And the other principle is called expense recognition principle. So similarly, expense is the opposite of revenue. Expense is something that we spend. Okay, so it says here that we match expenses with revenues in the period when the company makes effort that generate those revenues. Okay, so when do we generate the revenues? That is at the time when we should recognize the expenses to generate those revenues. For example, we have the customer ordered the items on January. We send the items in February, but while we send the items, we also incur delivery charges. Okay, we incur to pay the cost for the delivery at the same time that we deliver the item, which is in February. So we should also recognize the delivery expense in February, although we might pay the courier company in March or April, but we need to consider, we must recognize the delivery cost on February, because that is also the time that we recognize the revenue from the delivery of the items. Okay, so we have looked into the several very basic accounting concepts. We have looked at time period assumption, where businesses will divide the business into time periods, and that is important for reporting purpose. When we want to report something, we need to report according to time. Okay. Otherwise, we will not be able to report our activities. We need to specify a time for us to report our activities. Okay, so because of we split the time period into several sections, then that will involve the revenue recognition principle and expense recognition principle. Because we have time periods. When we want to recognize revenue, we need to look into which period that the revenue occur, and based on the accrual-basis accounting, we need to recognize revenue at the time we render the service. Okay, or when the performance obligation is satisfied. This is the revenue recognition principle, and the expense recognition principle. We need to match the expenses with the revenue in the period when the company makes effort to generate those revenues. Okay, and all these revenues and expense recognition principle is in accordance with GAAP.